Well, thank you everyone for joining. I'm really excited for our next group of panelists today. My name is Claire Carrington. I'm the Executive Director of the Canadian Blockchain Consortium. And today's panel topic is Trust and Transaction Security in Digital Currency Exchanges. I always like to start off with a little bit about who the Canadian Blockchain Consortium is. So we are a not-for-profit organization founded by this amazing woman named Suzanne West back in 2017. She had this wonderful idea where she wanted to kind of bring the province of Alberta together and teach oil and gas companies how to be technology companies with oil assets as opposed to trying to teach oil and gas companies how to adapt into technology. So we've been going strong for a few years now. We've just recently gone national, which we're really proud about. Certain things that we engage in, a lot of education. So webinars like this, we do great content coming out every 2 weeks where we try to engage with our community and just give them a really great understanding of different things happening in the blockchain space. We engage in different projects. We do large live events. We engage in advocacy. So if you're interested in learning more about our organization, we have a great website, canadablockchain.ca. Of course, as a not-for-profit, we couldn't be here without our amazing members and supporters. So just a big thank you to all the people that you see on the screen. They've been involved with us now since our inception, many of them, and we're just so grateful to have them here. A big thank you to the two that are being our sponsors for today's event. First off is McLeod Law. They're a full-service law firm with experience in each practice area. So whether your needs are personal or business related, they can help and take a customized approach to each client without sacrificing efficiency. And you'll see Matt McGuire, he is a partner with McLeod Law. And another one of our panelists today is Melissa Smith with BLG, and they are Canada's law firm. BLG provides high-value advice and addresses their clients' business problems. They are going beyond legal to consult and advise in the digital world. And they have expertise and experience acting in specialized and complex deals and disputes with an emphasis on client services. They harness technology and innovation to improve efficiency and deliver value. So thank you so much for our sponsors for being here today. We really do love engaging with our community as much as possible. We will have a live poll that we'll be launching for this. Please take it. It's going to give us some great insights into where you're from and also a little bit about how you're interested in exchanges. So definitely take the live poll. We will be doing a Q&A, so the conversation will go on for about 45 minutes, about 15 minutes for Q&A. If you can try and keep the questions into the Q&A box that you'll see at the bottom of your screen, that would be great. When you put into the live chat, it takes a little bit to scroll up to figure out where the questions are. So please try and keep specific questions you want to the panelists into the Q&A, and they'll answer it at the end of the session. But you're also welcome to communicate with yourselves in the chat option there too. We also, please engage with us on social media. We're on Twitter, LinkedIn, Facebook. If there's anything that you really like that our panelists had to say today, please like, tag them, use the hashtag Canada Blockchain, and we will also like and follow and share with you back. There's one thing I want to announce today. Starting May 1st, we have a really great it's kind of like social community give back that we're going to be doing. So for every new follower we get across all of our social media platforms, if you are new and you like and follow us and you tag us into something that's kind of like an uplifting message, we're going to be donating $1 towards brown bagging it for kids, which helps towards like struggling households in Alberta during COVID-19. So we want to have more inspirational things being posted up on social media, because I know right now it's not exactly a really fun time to be going on to any of your Facebooks or Twitters, but it's not great news. So tag something, even if it's your puppy, something that makes you happy, a photo of your children, just anything like that. If you tag us in it and you follow us, $1 goes to brown bagging it for kids for the entire month of May. So we want to try and feed as many homes as we can, so please engage with us on social media. So to today's event, really excited for this one. I love all of the amazing speakers that we have here today. So a bit of the synopsis is major security and privacy breaches in the world of digital currency exchanges have costed customers hundreds of millions of dollars, exposed sensitive information, and pretty much eroded public trust. We all can think of a few exchanges that have definitely done this. However, emerging branch of fintech is undergoing necessary transformation towards safer and and more trustworthy exchanges and enhance cybersecurity with new regulatory oversight with laws like AML and KYC. So that's a bit of the overview of the topic that we have here today. So I'm going to introduce our amazing moderator, which is Pamela Draper. And then she's going to introduce the rest of the panel and I'll get kicked off. So Pamela is currently the president and CEO of BitVo Inc., a cryptocurrency exchange that's launched in Calgary, Canada in 2018. She's also a total powerhouse, kick-ass woman, so you're going to learn from her. Prior to joining BitVo, Pamela spent approximately 14 years with top-tier Canadian banks. So she's got quite an incredible background with that. She's been involved in pretty much all facets of investment banking and advisory services. And most recently, Pamela held a position of director in BMO Capital Markets and Equity Markets Group in Toronto, where she was responsible for assisting North American corporate clients in raising capital in public and private markets. So an incredible wealth of knowledge. This panel is just packed with some absolutely amazing powerhouses. So I hope you enjoy what you're going to hear today. So, oh, hi, Michael. Oh, you're. So I'm going to kick it off to our amazing group of panelists, and you are now going to see me muted. All right.
Thanks very much, Kalea, and just in time, Michael. So Michael Rapkin's the head of institutional sales and head of global partnerships for DV Chain and DVX, respectively. Michael was previously the president and co-founder of Sig1 Capital, which is an institutional over-the-counter digital asset trading platform, which was acquired by DV Chain in December 2019. Previously, Michael was also a founding team member of Shorecan Digital Currency Network, which is a wholly owned subsidiary of the TMX group, focused on brokering Bitcoin and Ether OTC trades. Combining his past experience in traditional financial markets with his present day role in the crypto asset ecosystem allows Michael to effectively bridge the gap between those two worlds. Next up, we have Amber Scott. Amber, give everyone a little wave.
Hello.
Amber is the founder and CEO and chief AML ninja at Outlier Compliance Group. Amber specializes in anti-money laundering and privacy. Next up, we have Giles Dixon. Giles works for Grant Thornton's financial services advisory practice in Toronto and brings with him an international consulting and risk advisory background. Regularly works on a range of financial institutions and organizations operating in the virtual asset space, including virtual currency exchanges, brokers, BTM operators, and others. Giles' experience includes anti-money laundering, financial crime and risk management, regulatory compliance and transformation, as well as experience in program and operating model design, process improvement, cost optimization. Next up, we have Melissa Smith, previously introduced as one of the co-sponsors of this event. So Melissa's a partner at BLJ in the Securities and Capital Markets Group. Melissa's practice focuses on M&A, financing, and securities regulatory compliance for both private and public companies. Her clients represent a number of different industry sectors, including those from the technology sector. Melissa is a co-founder of BLJ's Driven by Women initiative and a director with the newly formed Canadian Blockchain Association for Women. And finally, last but not least, we have Matt Burgoyne. Matt is a partner in another firm who's also co-sponsoring this event, McLeod Law LLP. Matt is a business lawyer with experience on helping clients in the cryptocurrency space since 2013. He acted for cryptocurrency exchanges, Bitcoin ATM proprietors, Bitcoin gift card operators, stablecoin developers, cryptocurrency investment funds. McLeod Law was one of the first law firms in Canada to accept Bitcoin. A big round of applause for that. Okay, so we'll jump into our panel discussion today. So first, to set the stage, what we wanted to do was talk a little bit about then and now. So what did the space look like when people made a first time? How did they do that? What resources did they have? And how does that compare to today? So now having a sense of everyone's background, why don't we first turn it to Michael to talk about the early days. So when did you place your first crypto trade? What resources were available to you? And I think you're on mute. Michael, you're on mute.
Okay, perfect. And sorry if the camera keeps falling. I couldn't get my computer to work, so had to do it on the phone here. So to your question there, Pam, firstly, thank you for the wonderful introduction. But so when I first started trading personally, the infrastructure was definitely a lot different than it was today. I remember trading on exchanges and being worried about my money being lost in transit. You know, you would cross your fingers and pray that it gets there in a reasonable amount of time so you can get in on the trade that you want, and then, you know, pray that the money is able to get back to your bank account in a reasonable amount of time. On the other hand, DV Chain leveraged the technology and trading strategies of the parent company, DV Trading, to be able to trade in a much more robust ecosystem. And so DV Chain has been a liquidity provider and market maker since 2016, and really has been bringing a level of liquidity to traders ranging from novice to experienced that is kind of different than the ecosystem. So from that perspective, that's changed quite a bit. And when we began trading, everything was really done through a cold wallet, which would make things a lot more archaic. So today we work with a full-fledged custodian, Balance, who has made that process much more efficient for us and gives us much less operational risk. Also, when we started trading, derivatives weren't as prominent. So definitely regulated derivative exchanges like CME and BACK weren't around. Everything was just a lot more manual then. And so over the years, we've built out our own in-house system connecting us to a ton of global exchanges. But overall, everything is just a lot more automated now than it was, call it, even 2 years ago. And so especially, I'll kind of hit on this point for a second here, but especially for, you know, custody solutions, that was really archaic, right? If you wanted top level security, you didn't know who to work with. And so the operational risk of using something like a ledger or Trezor is a lot higher than now working with a fully fledged custodian that we do right now. And I'll leave it there for now.
I called on Michael specifically, but does anyone else on the panel want to add to anything that he said there?
Not to maybe add to some of the technical details and the details towards the end of what he shared, but I just want to share how I first got involved. It's a funny story, and this shows you in 2013, June of 2013, how lax the AML rules were. So I read about Bitcoin on it was Elite Daily, that website, or Vice, and so I looked into how to get Bitcoin. And at that time, Coinbase wasn't like I've read more about it on Coinbase. Tried to get a Coinbase wallet, that wasn't available to me. So my first trade was on CA Vertex, and I was instructed to take monies to a local BMO branch, which I did. I had no account at that BMO branch. I basically deposited cash to the teller, no ID or anything, to go to a specific address, and then just prayed that the Bitcoin would show up in the wallet after, which it did. And but I mean, I think that just shows you, you know, how the difference between now and then, and you would just never be able to do anything like that now in today's environment. But back then, it was a lot more lax and unregulated.
Absolutely. Thank you.
Can I just add there that if there's anyone listening to this who's running a cash intensive business and thinking, wow, that's brilliant, we can just get our clients to deposit the cash to our accounts for us, your banks probably won't like that. And if you're afraid of having your account closed by your bank, that's really not the best strategy to take. It's a bad one.
Yeah, I wouldn't recommend anyone do that now. Yeah, I was very young and you know, a novice at it. So yeah, don't do that.
That's a perfect point, Matt, because that's really the point of the first question was, what was it like then? And then the second question, and maybe we'll start with Michael again, and then the others can chime in, is how does that differ from today? Because even a couple of years in this space has made a very drastic difference in terms of how we operate. So maybe we can discuss that.
Yeah, so if I were to be looking at the space today as somebody who's never looked at it, and even let's say coming from a trading background or not coming from a trading background, I'd probably find the most reputable venue to trade with. And there's kind of a lot of resources out there that you can go online and see who's reputable, who's not. If you can't find those resources, then DV Chain or BitVo are very reputable, so you can take a look there. But just kidding, guys. But regardless, there's a lot of resources now in comparison to 2 years ago, where you'd find a coin that you wanted to trade, or you found some liquidity that you wanted to participate in, and all of a sudden you're not able to, or your bank's not able to send some money, and so it's gotten a lot tighter on the pipelines with regulations coming out. Obviously, where you're restricted to trading on certain aspects or in certain jurisdictions, but I'm actually, like, from any perspective in business in Canada, we're actually hoping for that, right? We're hoping for more regulated exchanges, and we're hoping for more clarity on that aspect, so we can know who we can trade with. I think one of the things I wanted to talk about was, how do you find trusted information? And so really, it's, again, through reputable sources and our own proprietary systems. We tend to trust, like, from our own perspective here at DV Chain, we tend to trust regulated exchanges like CME and ICE more, given their traditional reputations. We also prefer to work with regulated crypto exchanges. So in general, where do we get our pricing? Where do we get our information? That would kind of tie it in. And then I guess another aspect here I wanted to touch on was really, how do we evaluate products, wallets, different exchanges that are out there? And again, it's on a reputational basis. So we've been in the space for several years. We know, who the good players are, who the bad players are, and we don't always know who the bad players are, unfortunately. But it comes with experience. Hopefully there's, more streamline of that going forward, where somebody can just go online, see who they should be trading with, who they shouldn't be trading with. That would make things a lot easier. But as of now, it comes more with, experience and knowing the space a little bit.
Yeah. So in terms of knowing if an exchange is regulated or not in the Canadian context, after June 1st, when all exchanges are required to be registered as money services businesses, you'll actually be able to see that on FINTRAC's MSB registration. So there are some that do other activities that are already listed publicly. Most won't show up until after June 1st of this year. But if you just Google, so FINTRAC, FINTRAC registration, you can come up with the money service business registration. They have an open search tool. The registration is not a license. So the fact that someone is registered there doesn't mean that they're in any way vetted or endorsed by the regulator. And I think that's a pretty important distinction. If anyone's going around and saying that they're endorsed in some way by the regulator, they're either misinformed or scamming.
That's a good point, Amber. Thank you for that. So then, talking about security specifically, we have seen a lot of enhancements in cybersecurity between the early days and today. However, with failures such as Quadriga and Einstein, is there still long-term consumer appetite in Canada to support a strong exchange ecosystem? And what can help Canadians feel more at ease? Giles, we haven't heard from you yet. Maybe I'll get you to touch on these points.
Sure. Can everyone hear me okay?
Yeah.
Perfect. Yeah. So thanks, Pam. And yeah, I think you're absolutely right. For sure, we have seen certainly enhancements over time in terms of the controls in place around security infrastructure and things of that nature at dealers in virtual currency. And I think, to respond to part of your question there, increasing these controls and continuing down that path is part of what will really help to give the public more confidence in the wake of things like Quadriga and Einstein, as you've mentioned. We, as we've seen, we do continue to see certain security failings, and those two are really good examples of that. And I can tell you, just having had some professional exposure to both of those cases, that sometimes the way I like to describe it is those were classic examples of sort of putting the roof on the house before connecting up the plumbing. So, all of the nice things around kind of having the flat screen in the house were there, and you were moving the sofa in, but you didn't have the bathroom connected up and all the foundations and the good things that go into actually making a house a home. So Bit of a strange analogy, but what my point is that, I believe we're working towards a trend where there is appetite to support a strong exchange ecosystem in Canada. And I think a lot of what will make that happen is this trend that we're seeing moving towards actually adopting certain more traditional financial service security standards, be they things like system and organization control reports, which are basically a standard which has been around for decades now in the more traditional space around sort of attesting and testing the effectiveness of financial and system controls. So, I think that that's a really positive move, and things that we're starting to see people adopting now, particularly in the US. And following on a point from what Mike said actually earlier is, particularly around aspects like custody, where there were huge failings in particularly in Quadriga around that. And certainly moving towards not only using custodians, but also using custodians who have been through this SOC attestation process, and they've had a sort of stamp of approval from a standard setter. I think that's going to be something which is going to be a continuing trend and will help to give Canadians more comfort in the space. But the last thing I'll say on this is that those types of undertakings are extensive, they're resource intensive, and they're time consuming and can be quite costly. So there are equally other things that I'm seeing which are much more practical, much more tactical in the market, which serve just equally as well to give comfort around security and cybersecurity. An example I would share would be what we've seen with some of the big 5 Asian exchanges, and setting up these informal communication networks between themselves. And I think actually one of them was put to good use last year when Binance was hacked for a few $1 million, and they actually managed to track and trace and freeze those funds through those informal communication networks. So that's a much more simple, practical thing, but it's really demonstrating to users that security is not just a sort of tick box exercise at these institutions. It's actually a mindset, and that's really what will help, I think, foster the strong Canadian ecosystem going forward. Pam, I think you might be on mute.
I'm going to try to speak closer to the mic too, because apparently I am a little bit quiet. So I was just saying, Amber, I wanted to go back to a point that you had started to touch on, and that's the changing regulatory environment in Canada. And there's a couple different areas of this. So we'll kind of break it down. And why don't we start with fintech and registration as a money service business? Maybe you can give us kind of an overview as to where we're at. You referenced the June 1st, 2020 date, which is coming up very quickly. So what happens as of that date? What are the key implications, and what does it mean for existing businesses in the space and also consumers?
Sure. So I will say that there are a lot of exchanges, brokerages, companies in the virtual currency space that have been doing voluntary anti-money laundering compliance for a long time, either because they've been asked to do so by their banks or because they've chosen proactively to do so. If that's not the category that you're in, know that June 1st date is a hard date. And so the regulator has come out and said that it is still expected to be the date for compliance. There's not a broad spectrum exemption that's been granted due to COVID or for any other reason. So there is still expected that there be compliance in place. What that means, if you are buying or selling virtual currencies, if you're exchanging one virtual currency for another, and you're targeting customers in Canada, whether you're a business that's based in Canada or not, is that you're expected to act the same way that money services businesses act today. So under certain circumstances, you would identify customers, you would report suspicious transactions, you have a compliance program in place, you have a compliance officer in place. And that doesn't mean that you have to necessarily go out and spend hundreds of thousands of dollars hiring new people, but it means that you definitely need to build those expertise within your team. So that may mean external hires. If you're a smaller company, that might mean that someone on your team needs to get up to speed on what those things are and take over some of those responsibilities.
Great, thanks for that, Amber. And Giles, maybe also given your background and area of expertise, is there anything you wanted to add on that point?
Yeah, and I'd just like to echo something that Amber mentioned and I've seen as well, which is certainly that it is worth noting that a number of groups in this space have been, I guess, getting ahead of this for some time, and some have been working on it for years, in fact. And we've seen a real range of institutions, some who have almost a bank level grade compliance already in place, and some who are maybe a little bit more behind the curve. So for those who have maybe waited to see what the regulations are going to pan out to be, you know, there's more work for them to do. But I think, you know, from a regulatory perspective, these new regulations are manageable for these groups, and there's been some good dialogue between the industry and the regulator in trying to kind of give some feedback on those things. But they do require some good thought and knowledge around the applicability of your particular business model and how those translate in a regulatory environment, because there are specific new pieces of regulation that have come through in June 1st that are purely related to dealers in virtual currency, on top of the already existing money service business regulations, which need to be considered and will present some challenges, I think. So it's really just about, but I think it's manageable if it's thought through in the right way. And one of the things that I would say that's been a really positive outcome from all of this is, and something that this industry does, I think, the best, is the collaborative nature of how these groups work together. And we've seen this in cases such as the Project Participate initiative, where, you know, this is an initiative where dealers in virtual currency are getting together around the globe, actually, to try and document what are kind of common suspicious indicators of money laundering in this space, because there are unique ways, as we all know, in which money moves, in which potential suspicious activity looks like. You know, so despite, I should say, there being no kind of formal guidance at the moment, the industry, I think, has done a really solid job of coming together and trying to document that stuff by themselves. And I really give the industry credit for that, and long may it continue.
That's absolutely true. I think that in some cases, the collaboration that we've seen in this space is so incredible. And in some cases, even beyond what we see in banking communities, which is pretty fantastic in terms of being able to determine issues and patterns and halt transactions very, very quickly. The one bit that I wanted to add to that, just in terms of a scam that we've been seeing, is we've actually seen several fake FinTrack registration websites, some of which are asking for money. FinTrack registration is free. It's on the official FinTrack Canada website. Please make sure that you're registering for the correct site. And if anyone or any website is demanding money as part of that FinTrack registration process, that's a scam.
Wow, they will literally try everything.
And they're really good. I saw one just yesterday where graphically, if you'd showed it to me and I hadn't seen the top bar where the address was, I wouldn't have known that it wasn't FinTrack's site. They did an excellent copy job.
Yeah, I think that's a really good point, just across the board. If anyone is ever asking you for money, where you haven't agreed to purchase a transaction that you've probably initiated, if anyone is ever offering to take your money and give you 5 times it back, those are generally across the board key bright lights that something is off and that you should not be engaging, whether you're a business or a consumer. So leaving the FinTrack for a moment, because I think that covered it well, the other part of the Canadian regulatory coin right now is the CSA, or Canadian Securities Association, and that is comprised of the provincial securities commission, so the OSC, for example, the ASC out here in Alberta. And we're going to give this question to Matt and Melissa to explain, and I don't envy them, because it is one that's in flux right now. There's a lot of change going on, and there's still a lot of uncertainty with respect to where we are in that process. So maybe with that, I will turn it over to, well, I say Matt or Melissa to go first. And where are we? What are the implications for businesses, if any can be drawn at this point? Then also, what are the implications for consumers, if that doesn't be drawn now either? Maybe we'll start with Matt.
Oh, sure. So, yeah, I just, the notice that was released in January was simply the staff's view. So it's not legally binding in itself. The law hasn't changed. and there's always been derivative law in Canada. So it's important that's clear. Those are simply staff views. Now, they might be right, they might be wrong, they might have a legal basis, but it's their opinion at this point. To go back, my view is, I don't know that, while I understand that obviously if an exchange is trading in a security, a coin that's a security itself, then it's probably subject to dealer registration requirements or some other registration requirements. I don't know that it's a fair position to say that simply because an exchange is holding custody of coins, that it then, and there's no immediate delivery, that it necessarily follows that there is a derivative contract. At least in Alberta, and in other jurisdictions, there's a pretty specific definition of a derivative, an option, swap, futures contract, forward contract, or other commodity contract, whose market price or value is dependent on an underlying interest. So that's the classic definition out of the Securities Act in Alberta of a derivative. So if an exchange was permitting a user to speculate on the price of Bitcoin, that might be trading in a derivative. If it was allowing a user to buy or sell Bitcoins where a user pays a different price, at a preset price at a later stage, that would probably be a derivative. So I think it's really important within the context of the notice to look at every exchange on a case-by-case basis, analyzing the facts, the user agreement, what is actually being done by each exchange is really important. And in fact, the staff mentioned that in their notice. One sentence that struck me in the notice is if an exchange has ownership, possession, and control of the user's coins, that's very significant, that concept of ownership, possession, and control. And I don't know if every exchange in Canada that has custody of coins necessarily has all of those three aspects: possession, control, and ownership on a legal basis. And I think the circumstances and facts would have to be looked at. Yeah, I mean, I know that there's been a lot of discussion in the cryptocurrency community in Canada. There's been Telegram groups. There have been letters written to the regulators specifically on this. And so I'm interested to see what that'll do, if that would change staff's view. I don't know that it would, but it'll at least get the discussion going. And perhaps there's a carve out for some exchanges from this immediate delivery concept, and a carve out for exchanges that aren't dealing in derivatives. Perhaps if the staff have a legal basis for this immediate delivery concept, maybe there's some exemptive relief available for some exchanges, and I'd like to see the parameters of that. So I think there needs to almost be a follow-up staff notice. I think that there's going to be there was a consultation paper that came out in March 2019. I think there's going to be a follow-up to that, from what I understand. So I'll just leave it at that. But those are my thoughts right now. So we kind of know where they're going, where the regulators are going, but we're not 100% sure.
Okay, great. Thanks, Matt. What about?
And I'd agree with a lot of what Matt just said. Something I would. Just for context, our securities commissions obviously have two roles. One is to promote a sort of efficient market, but the other is consumer protection. So at least half of their job, if not more, is consumer protection. I think, there have been some large failures of exchanges that have resulted in people losing a lot of money. The commissions know this. So I do feel the commissions are trying to find the right way to regulate. They don't want to be left out of this. They want to be regulating here. They want to be seen as regulating here and protecting people. So, initially I thought they would get to it more around just classifying more and more tokens as securities and taking the view they're trading securities on these platforms. I don't know, I would agree with you, Matt. I don't know the approach they took, which was to say, well, unless you have immediate transfer of possession, this is a derivative, therefore you're legally that feels a bit convoluted and uncomfortable to me. I wasn't a big fan of that approach. I do think it was to achieve their goal, perhaps in some way to become the regulator and have jurisdiction over those exchanges. We'll see, I guess, once it's tested, if it does sort of stand. I don't know if it will either, to be honest. I do think staff has been really struggling to keep up and understand the challenges involved with crypto trading and with crypto assets kind right from the beginning. I don't know that they always get it right. They do keep trying. I know that March consultation paper that you referenced, one of the things that struck me reading it is it's probably the most open-ended question staff request for consultation I've ever seen. Normally they would come out and say, this is what we're think of doing, let us know your thoughts. Are we hitting the right notes? And this one was sort of like, we think custody is an issue. How do we fix it? They were such open-ended, broad questions. So I do think they're still trying to figure this out. I thought it was, a good sign when the EFT, the staff had originally sort of refused to issue a receipt for an EFT that would be invested in crypto assets. And then the commission sort of overturned that, which I thought was a good sign. I think it also speaks to, though, an acknowledgement of the advancements in the industry, because, certainly one of the reasons staff originally refused that receipt was they felt it wasn't in the public interest due to security. And a big part of what they were talking about was a lack of security in the exchanges where they would have to be purchasing and trading crypto assets. So I think part of that was, the company just fighting and, addressing every question relentlessly to get there. But I think also it's just an advancement and acknowledgement that there has been a lot of really good advancements in regulation and security in the last little while.
Perfect. Thank you, guys. And maybe before we leave, Matt and Melissa, if we could just broaden that question a little bit to the big banks. So the narrative that traditional financial institutions are getting involved in the crypto space has been kind of constant over the last 18 months. Presumably, or rely heavily on regulation. Given what you just said, Matt and Melissa, do you think that regulation will spur the big banks to get involved, or what do you think will require for them to get involved?
The banks for years have had concerns with crypto assets. I think they've been AML and risk concerns. I think early on there was a lack of understanding on what Bitcoin was and how it worked and how much resources a bank would have to dedicate to their compliance department and would it be economically viable to board crypto clients. So I think there's been a lot of time now to kind of get educated on it. And I don't know that right out of the gate that any of this, any of the notices or the consultation paper will necessarily change the situation with the big banks now. I don't think there's a competition concern on the banks. I think there's fundamentally an AML risk, but to an extent, banks themselves don't always follow their own AML compliance procedures, and we have banks paying enormous fines because they're enabling cartel movement of cartel drug money. None of the, different articles will say different things in different publications, but there's a lack of discipline with some of the actors involved at the bank, and no one really gets any jail time for facilitating El Chapo to deposit massive amounts of cash through the bank. So I don't know. There's a bit of almost a hypocrisy arguably there, but I think that the definitely with FinTrack, I think maybe there's a boost. There could be a boost to confidence, and on the securities regulatory side, I think that's yet to be determined if that would have any bearing on whether a bank would board a crypto client. But those are kind of my thoughts.
I would just add in the securities regulation side, I think everyone would benefit from certainty, which will come over time, but is a bit of a slow process, including the big banks. I think there's just a lot of unknowns on how a regulator would treat whatever it was. So I do think we're still maybe a ways away from having that certainty. And partly it's because the regulators don't want to get it wrong. So kudos to them on that. They don't want to slam a bunch of rules down that are going to completely make it impossible for people to do business. So in my thought, certainty is the other thing we're really missing.
So I'll add a little bit here, Pam. I agree with both Matt and what Melissa mentioned there. And just, I guess, back to Matt's point there, if anybody is looking for a documentary showing specifically HSBC laundering money for the Mexican cartel, it's called Dirty Money on Netflix. So take a look at that. But I think that the narrative essentially behind traditional financial institutions getting involved in crypto, having regulatory clarity is probably one of the most important ones. None of the traditional financial institutions want to risk their current business lines, their current licenses in their main lines of business without actual clarity from the regulators on how this could be done. So I think it becomes a lot harder for them to maneuver, and everyone from custodians to insurance providers find it harder to work with crypto companies. It almost becomes like catch-22 type situation. So I think just with a little bit more clarity, it could push banks to get a little bit more involved. But yeah, I'll end it there.
Okay. Thank you, guys. Maybe one more point on the regulatory side, but also tying it back to some of these new initiatives or emerging technologies in the space, which could potentially complicate the regulatory aspect and hinder further processes in this realm. Giles, maybe you want to speak to some of these. I'm thinking things like the Lightning Network, which don't necessarily fit in the proposed regulatory framework.
Yeah, it's my favorite topic. I think, you know, for all the innovation that we all know and love in this space, it obviously presents challenges for us as you know, whether it be financial crime professionals or securities professionals. And certainly from my world, from an AML perspective, you know, even today there's still things which present challenges to us in terms of you know, effective AML in this space. We're learning a lot. There's a lot of unique aspects to this industry which us as professionals are trying to, you know, keep up to speed with. And even things like how being able to trace funds that arrive into an exchange and then leave, you know, due to the way that exchanges handle their hot wallets and pull those funds, it's as we know, very difficult to trace those two ends. But I think the one thing that comes to mind, and you've mentioned it already, Pam, is the Lightning Network. For me, that's one of the things that keeps coming to my mind as a new or emerging piece of technology in this space, which will further, you know, challenge us to adapt and adapt accordingly from a regulatory perspective and from an AML point of view. And you know, this is the technology whereby I can create and close channels by myself, with payment channels with people, with institutions, transact off chain, and you know, only at the point that am I closing those channels are the transactions registered on any form of blockchain. So you know, it's anonymous. It's the speed of that movement is extremely fast, and really it allows anyone around the world to move funds very quickly and without being ID'd in any way. So you know, that's a technology which I think is going to present some challenges going forward. And I think, as I mentioned previously in my example of Project Participate, you know, this is going to be another area where I think honestly it's the industry itself which is going to have to try and do the work to document what we think good and effective AML looks like around this type of technology. And I'll refer you to, if you're interested, there's a really good article written by Peter Warwick and a couple of his team from the Bitfinex exchange called The Lightning Network Deconstructed. If you type that into Google, it'll be the first one that comes up. That really highlights some of the challenges here and what some of the possible solutions might be, from, you know, establishing what the suspicious indicators might look like around that. And but really the point being, I think due to the pace of this change, and I think it's really going to be on the industry to work with the regulators and try and educate one another to come up with what we think the solutions will be from a regulatory and compliance perspective.
Thank you very much, Giles. We have some good questions coming in from the audience. I want to get to some of them. The first one is, and this is securities related, so maybe we'll put this to either Matt or Melissa, and then please feel free to chime in. But the question is, what is the best source to find out which jurisdictions are more friendly and favorable to launch security tokens that are in compliance with securities regulations? And then follow up to that, what is the best source to learn more about the Canadian framework? Maybe I'll ask, yeah, why don't you go ahead?
Oh, sure. Yeah, and I'm not quite sure if the question is referring to jurisdictions internationally or domestically. I'm going to answer it domestically. I hope I've guessed right there. In the Canadian landscape, the laws are the same across provinces. So there's not sort of a province or territory. Well, I wouldn't go to a territory. I think they'd have less staff to deal with this than a province. But there's not really a difference in the law that is applicable. You do certainly find different commissions more or less knowledgeable about things. I think it's fair to say the OSC has probably taken the lead. I wouldn't say they're friendly necessarily, but they are very knowledgeable probably and have put out a lot of the guidance. In regards to the best source, a lot of law firms have written about this, so there is a ton of information. If you Google, I'm sure, Matt, your law firms put out stuff. Mine certainly has. Anytime there's a CSA notice or a request for commentary that goes out. And I don't know, Matt, I don't know if you have any thoughts on where there's a repository of sort of a general framework. I know I've seen one. It's driving me nuts, and I can't think of where it was now. It might have been on the OSC website, but it was a nice compilation of all the staff notices that have come out, all the applicable legislation, as well as the IROC kind of guidance around this. If I can find it, I'm happy to pass it along after this webinar, and people can maybe link to it.
Yeah, the only, and that's great, and I completely agree. The only thing I would add is just like, I mean, the way I would find a repository of, you know, overseas countries that may have adopted different regulations. Just, I would go on Google. There's a lot of people. A lot of people have written about this. I don't know. I mean, I don't. You might want to try some of the you know, news organizations, crypto, like CoinDesk or Cointelegraph or The Block, and just do a search, you know, crypto friendly jurisdictions, and you know, there's a chance that someone has written a blog or something about it. But yeah, it's that's what I can suggest for overseas. And then I kind of agree with Melissa. Locally, there's a lot of law firms at BLG and McLeod who have written on this, and others as well. But I'm sure that you could find something on a law firm website, but I think that would probably be the best place. Yeah, that would summarize everything. Yeah, law firm website.
Can I add a comment there, which is just that your business case matters. And so if your intent is to serve people in Canada or in the US, that's where you are. That's where you're going to be located. That's where you plan on your customers being located. That's where all your expertise is. Stop searching for a way to register on the moon. That's weak. That's so weak. If you don't have the expertise to actually be compliant in the jurisdiction that you intend to do business with, maybe you should get into another business.
Absolutely agree. And if we want to just like look at the broader question, if you're the directing mind, if you're a director and an officer, if you're directing something in Canada overseas and you're doing a distribution that's not in compliance with a country or just jurisdiction overseas, the OSC, if you're in Ontario, or the ASC in Alberta, can hunt you down, and you could potentially be liable. So there's a lot of rules and regulations around that. So you can't conduct or direct an illegal distribution from your basement in Calgary. It's just not going to work. I would advise against it. Yeah.
And we're going to stick with Amber for a second, because there are a couple questions coming in that I think are in her wheelhouse. Maybe she'll correct me if I'm wrong, but regulating an exchange as an MSB ignores the fact that activity on trading platforms looks very different to that of a traditional MSB or money service business, and indicators of suspicion, e.g. rapid in-out activity. What are your thoughts on this, Amber?
Yeah. We definitely need updates to the indicators that FinTrack has published right now. I'm going to assume that that's probably something that's in their queue. I know that they were looking to get pre-COVID 60 pieces of updated guidance pushed out this year. So they have a lot on their plate. I assume that that's something that's in there. But if you are in the midst of developing a compliance program and you're looking at all of these indicators and they're too general or they're not well suited to your business model, use the ones that are well suited to your business model. Think about the ones that are well suited to your business model. Look at ways that you can be part of things like Project Participate, that you can work with other exchanges and share knowledge about the indicators that make sense for you. Because you're absolutely right. The indicators that are there now for traditional fiat-based MSBs aren't going to make sense in a lot of cases.
Yeah, and I'll just add, Pam, I've just posted a link to an article, and it's from ACAMS today, which is an AML association here and around the world. And again, it's another good article around the specific indicators of suspicion that have been cataloged over the last couple of years at some of the larger exchanges. So it might just be worth a read.
Thank you very much for that. And sticking along the AML lines, there's a question here from an attendee. If we choose inexpensive AML compliance software, are we running the risk of missing bad behavior and getting fined by regulators?
You have that risk if you spend $1 million on software. Your regulator gives 0 dams if you spent $1 million or if you spent $10. They give dams that it works. So test it. Like you would in any other element of your code. You wouldn't just say like, oh, here's some $20 code. Let me just stick it in there and assume it's going to run our transaction software. Fine. It's going to, no exploits, no problem, no bug bounties. It's all good. We're just going to deploy it, right? You would never do that anywhere else. Why would you deploy something in a compliance type of technology function that you hadn't tested, that you hadn't vetted, that you weren't sure if it worked or if it made sense for you? It's not about money. It's about that it has to work. So whatever it is that you deploy, test it. Make sure that it works.
Yeah, and the thing I'd add on to that is just, it's so important, and what FinTrack will be looking to see if you ever examine, for example, is that you've actually tailored those, whether they're tools or even if we take a more basic example of some of the documentation that you're required to have as part of your AML program, be that a risk assessment, your policies and procedures, it's got to be contextually appropriate and relevant to your business model. And Amber's mentioned, your business model is so important. She's absolutely right. It's no good to have a kind of an off-the-shelf service if that's the case. And you've got to consider the specific risks that might be present in your organization. That will then be able to translate into some good specific controls and policies that will help you to mitigate that risk. And then in turn are going to help you to be able to tune and calibrate any software that you end up taking on to make it really appropriate to your business. That's what they're going to want to be seeing.
Anyone else on that one?
I would just add that that's a constant process. And so it isn't a one and done. We've written our program, we put it on the shelf, we've tuned our software once, that's the end. It should be continuously refining it in the same way that you would with your user interface or anything else that's part of your business model. There's a saying in tech that if you don't look back at your MVP, so the first product that you launched, and feel embarrassed, then you didn't do it right. Compliance is the same way. If you look back 5 years later at your first compliance program and you don't think, ooh, that was rough, then you haven't been improving it at the right pace.
I really like that. So the next question is, what is the safest way to send money? And maybe I'll start and then others feel free to chime in. But I would say any version of sending money, whether it's crypto or fiat, it's not necessarily the method, but it's more the parties that you're transacting it with. So the best way to make sure that your money arrives to and from where it is to be safely is to make sure that you're sending it to or from a party that you trust, whether that's peer-to-peer or whether you're using a platform like an exchange. And we talked earlier about how you would evaluate some of those by reputation is probably the best way now. But I think other things that you can look at too is Who are the backers behind it? Do they make themselves known? Are they reputable within their industry? Do they have prior experience in technology and finance that would allow them to safely and securely handle such transactions? That's what I would start with, but I'll put it out to the panel now to see if they have anything to add there.
I think who is your counterparty is a really important part of that question. If I'm talking about doing a peer-to-peer transaction with someone that's fairly sophisticated, that I know is going to give me an address that they have access to and they understand the risks associated with that, they're not going to accidentally transmit their private key, things like that. That's a very different situation than if I'm sending a transaction to my mom, who now has a Bitcoin wallet, but isn't going to be a sophisticated user. And isn't necessarily going to understand things in the same way. And so really understanding who that is and what that person needs it for. So even though I'm really excited that my mom has a Bitcoin wallet, if what she, like this is well documented, so I will say it's Rise Wallet, and I think they have this really neat, fantastic way to send this value on cards. If I know that my mom's excited about, getting more Bitcoin, will I send something to a Rise Wallet address? Probably. If I know that my mom's credit card isn't working and she's at the grocery store and she needs groceries right now, is that what I'm going to do? Probably not. That's not going to be the easiest thing that she needs to do to be able to buy groceries right now, unless she happens to be at an unlikely grocery store that accepts Bitcoin.
So another question that's coming now through the chat, but we'll pick it up, is how will regulated platforms versus open platforms like Bisq be seen by regulators? Once declared, if you self-custody, can these institutions keep your info safe? If it's leaked, it's your house and your family, not a commercial area that is compromised. Are they dry for that responsibility? History does not show a good record on this. It's a pretty involved question, but I think if you distill it down, it's how do you know that you're transacting with a platform that you can trust with that information, whether it be regulated or an open platform like this?
So I'll be the first to say that I love Bisq, and I've spent a lot of time talking to them. I love what they're doing. I love that they are the first in so many ways to do certain things. But in terms of a lot of those, of those responsibilities, or are we really at a point where we legally have something that's really, an autonomous, decentralized organization? We do not. We have various ways to try to get there, but we're not there yet, where I think that we really have a framework that's doing that. Most of the things that I've seen that will call themselves, a DEX or a decentralized exchange actually have an identifiable company behind it or a person behind it. And I think that as long as that exists, then there's liability. Just because you say that it's code doesn't mean that there's no responsibility somewhere behind that. And certainly when they are for-profit enterprises, there's usually some type of enterprise behind it.
And so I'll add there from a regulatory perspective, it would be hard for us to trade from a DV chain perspective with somebody that we don't know who the counterparty is. So it becomes, from a regulatory requirement, difficult for prop desks like us who are under certain regulatory regimes, that it becomes difficult for us to see how are we running KYC, because if it's truly decentralized, right? Who are we actually putting through the KYC AML process? But if it's not truly decentralized, then this whole aspect of a DEX kind of goes out the window. And back to Amber's point, if anybody on the call remembers Bancor, they were one of the largest decentralized exchanges. I think it was back in beginning of 2019, and they had an issue and they were able to do a centralized shutdown. So that really showed the exposures of certain DEXs. And so again, you just have to be a little bit careful there.
So one last question here, which I think really well with our timing. Rather than waiting for regulators, is there any willingness in the community to develop its own standards on topics such as privacy and security? And again, maybe I'll start and then I'll turn it over to the panel. But I would say yes, there is willingness for people to collaborate, but it's more so willingness of a group of us to get together and say, we're going to hold ourselves to a certain standard. I think there's a group that entered the business that set out to do that from the get-go. I know when we started our platform, we all came from a traditional finance or payment processing background, so we were familiar with protecting privacy, with protecting information, with protecting funds, and saw perhaps a gap in the existing market where we thought that that expertise and a platform that was willing to hold itself to a higher standard without being required to do so was necessary. And so we do that, and I know there's a group of individuals and companies within the space that do as well, and we certainly share information and best practices. We have a group on the go right now which is discussing how we actively approach the regulators and discuss with the regulators how the best practices that we think we've developed in the space should be put into force as part of the regulation, not to be further restricting or unduly restricting, but to help the regulators form the best possible regulation, one that appropriately balances consumer protection with technology development and advancement within the industry. So maybe with that, I'll open it up to the panel again to add their thoughts.
Good. Just a quick comment. I think that's exactly what the regulators would want to see, a group coming together, trying to be accountable to each other, you know, wanting to comply, wanting to do what's in the best interests of protecting the consumers and their, you know, manage their business. So I think that kind of initiative is exactly what the regulators would probably want to see in Canada.
I agree. I think the regulators, I think we were talking a bit earlier, are looking for or trying to figure this out, and it's not necessarily their only job. It's not where they live all the time, so they're not the experts. So I think if people are proposing plans that make sense that address their concerns, they would be very happy to hear that and even to draw from it in some cases.
And I would just like to mention the cryptocurrency certification consortium. So C4 has an open security standard, an open audit standard. It's published on GitHub. They do security auditor training. So it's really cool stuff. If you're looking at it and thinking, you know, how do we start to even think about the standards that should exist for security for our exchange? It's a really nice starting point.
Great. Clay, I'm cognizant of time here. Was there any, there's one more question if we do have time, otherwise we could potentially look to wrap things up.
Yep. Sorry, just getting my screen back. I don't know if anyone can see me. Awesome. Well, thank you guys so much. That was a really engaging panel today. Please, everyone, don't forget that our promotion starts tomorrow. So like, share, tag us in something inspirational, and we will donate $1 to Brown Bagging for Kids. Oh, and you're getting some congratulations. Well done to all the panelists. So I know they can't hear us or hear us clapping, but you know, round of applause. Thank you guys so much for joining and attending in this today. It was a wonderful, really, really engaging interaction. Loved hearing from all of you guys. Thank you so much to the community. If you guys like this one, our next one is coming up on May 14th, I believe, and it's on supply chain. So we're going to be talking about food resiliency and do we actually have to worry about food being stocked on the shelves during COVID-19? We have a great panel coming up to discuss that one. So again, thank you guys all so much. If anyone missed this, we will be recording this to go on to YouTube later today. And see you guys next time.